In our Dairy Today report, USDA supply-demand numbers also include dairy. The department is raising its 2011 milk production forecast to 195.7 billion pounds. Behind the forecast, a more rapid than expected expansion of the size of the nation's dairy herd. Looking to 2012, USDA lowered its projected milk output. It's guessing higher feed costs will slow the rate of growth of milk per cow. The USDA also lowered its 2011 price forecast to $20.15 to $20.35 per hundredweight, but things soften up even more in 2012. Prices are expected to range from $17.80 to $18.80. Meanwhile, in cheese markets, prices are falling. Cheese has dropped off August highs, trading in the $1.79 range. Helping support these prices, strong cheese exports.
We've been about 4% to 7% running over last year's rates. July was the softest yet for 2011. A big portion of that is we started to see Oceania and Europe start to come back online. For a while, well, probably since even back in 07, a lot of times we were the only players in the game.
Mike says with inputs staying where they are, producers can make margins work with a milk price in that $17 range. If corn goes to $9 or $10, Hogan says milk needs to sell at or above $18.50. Mike returns in our next segment as he and Al Pell discuss the weak dollar and its positive impact on exports of U.S. ag products. Meanwhile, larger dairy producers in New York State are getting a break from environmental regulations after flooding from Tropical Storm Lee. The State Department of Environmental Conservation is giving pollution exemptions to dairies in 15 counties. The exemptions include discharges of lagoon waters, putting waste milk into lagoons, even land applying that milk if there's a danger of lagoon overflow. Producers do still have to submit an incident report within 5 days. And don't forget, for the very latest news affecting the dairy industry, including production and policy issues, check out dairytoday.com.